Okay guys, good evening and welcome to Baptek Academy. If you're new to the channel, please like and subscribe to our channel, turn on the notification bell so whenever we drop contents like this you're going to be notified. Alright, and from our last class we talked about the long position. Now we're going to be a bit fast in today's class because we want to cover up the remaining terminologies associated with forex trading. Alright, so just tighten your seatbelts, let's fly together. It's going to be an awesome time, few minutes. All right, so from our last class we looked at long position, we looked at short position, we took a lot of illustrations, examples. We also looked at stop loss, take profit, we looked at risk to reward ratio, we looked at pending orders, which includes the buy limit order, the sell limit order. We took examples in each and every one of them. We also looked at the buy stop order. This was where we stopped in our last class, and today we're going to move further from here. We'll be looking at the sell stop order. All right, yes, we'll be looking at the sell stop order. So okay, this is where we're going to start from today. So we say the purpose of the sell stop order, it is placed below the current market price. This order is used to enter a short position once the price falls to a certain level, suggesting a potential downward trend. All right, remember it is placed below the current market price. So let's quickly get to our charts. Let's explain what the sell order is. What's wrong with this device? I'm supposed to be doing this. Okay, so let's say now this is gold. So let's say we're looking at pattern. Do not disturb. Okay, so now this is gold. Let's say we want to actually illustrate a sell stop order. Let's quickly look at another market instead. Now let's say in this market we want to for instance, all right, we want to place a sell stop order. We'll just looking at this current region where it's a bit consolidating, we can actually come and say we can place a sell stop order below the support level. Okay, now around this region we can place a sell stop order, meaning if the market breaks the support downwards, if it breaks downwards and if it's to continue down, we should trigger our sell trade. So we go short along with it, right? We should keep us in massive profit. So it's that simple. If the market should break this level, if it should break this level, all right, we can keep our pending order, our sell stop order there. Pardon. So we can, sorry about that, we can keep our pending order down here. So we'll have to sell our pending order down, set it down here, and if the market breaks the support and it keeps going down, it triggers our sell position and we go along with it. So how to set the pending order? Remember we said in our next class we're going to be explaining the terminologies. I just want to be a bit fast in this class so we can proceed. So this is the icon where we'll get our pending orders. So we'll click on that, this icon here, click on it. Now we're going to be saying sell limit and buy limit, all right, but we're going to keep it here. Remember a sell stop we're looking at, so we'll keep it below the below the support level, excuse me, below the support level. Then we'll click on this arrow. Okay, this is what I want, this arrow down here. All right, we'll just click on this arrow down here, this one, so we can remember a sell stop order we're looking at. So what the next thing we do is we click on this buy limit, we will change it to sell stop. All right, so we'll click on it and we'll choose sell stop. So I'm going with one standard lot, then I'll just come down here and click on place down here, right? So just click on place and the sell stop order has been placed. Now this is it. So our expectation is if the market breaks the support and if it's continuing downwards, it should trigger our sell stop, all right, our order, so that we'll be in massive profit. That's just about the sell stop order. All right, the next thing we're having is a trend line. We're going to be looking at trend line. We say a trend line is a straight line drawn on a price chart to connect two or more price points. Trend lines are used to identify and visualize the general direction of price movement. All right, so it's very simple. We use trend lines to identify the general direction of a market. If its market is on the upside, if it's on the downside, we will use trend lines to visualize, to make it more visible, to identify, to visualize the general direction of the price movement. And we said there are two main types of trends. The first one is the uptrend. All right, we said an uptrend is characterized by higher highs and higher lows. Right, now we're going to keep it very simple. We'll just go to the charts. We'll show the characteristics of an uptrend. It forms higher highs and higher lows, right? So if we see higher highs and higher lows in a chart, we know that that market is actually an uptrend market. Then the next type we're having is a downtrend. Remember, we're just going to take all together, go to the chart to explain what an uptrend is. We'll explain what a downtrend is. We'll also look at trend lines. All right, so we said a downtrend is characterized by lower highs and lower lows in a price chart. All right, says it indicates a bearish market where sellers are in control. All right, and the trend in a downtrend, the trend line is drawn by connecting the lower highs, forming a descending line. Now let's quickly go to, let's forget about the English for now, because forex is actually a practical thing. So we'll be looking at the charts even as we explain what a trend line is. We'll also look at what an uptrend market is and what a downtrend market is. So let's say let's go with one of my favorites, GBP USD. Let's look at GBP USD. Let's go to the higher time frame. Let's say this is none. Okay, so okay, first of all, trend line, a trend line. So what we do is just click on this on your screen. Right, if you click on your screen, this round stuff is going to pop up. Remember, our next class we're going to be explaining this trading interface, so you can't afford to miss that class. All right, for the sake of this video where we're talking about trends and all that, we're just going to make use of few icons. All right, so in next class we'll explain all the interface, so don't miss it. All right, so for the sake of this, we are looking at picking out trend line. Okay, so we'll look at this tool, this particular icon here. Yes, the one, okay, this particular one. All right, the one that has a triangle, circle and square all together, all in one. So we're going to click on that icon, click on it, and let's say if you're new on this platform, you're not going to be seeing, you won't see all this. Now all these are lines I do have on my charts. Okay, so if you're new, you won't see all this. What you need to do is just come to this plus icon. You just click on the plus icon. All right, and you won't see all these favorite objects, because if you've not made use of the platform, you're not going to have favorite objects. Hope we are together on this. So if you come here, it might be plain. All you need to do is just click on the plus icon up here, this icon here, this one. Yes, this one. We'll just click on this icon and we'll proceed. Now, yes, so what we need is the trend line, this one. The trend line is the one we need. So just click on the trend line, choose a trend line. Sorry about that. Okay, we'll choose the trend line and we'll come to the chart. We'll just join. All right. Yes, we'll just join. So now these are the trend lines. We actually use them to visualize, to make it more obvious for us the direction of the market. Are we together? It's very simple. Now let's just use this also to explain what an uptrend is, because from our visualization with the trend lines, we've come to see that the market is actually on an uptrend in this particular case. So what are the characteristics of an uptrend market? Excuse me. What are the characteristics of an uptrend market? We said an uptrend market keeps forming higher highs and higher lows, right? So now let's say this is one of our low, okay? Now this is high. Now this is higher low. This is higher high. Bear with me. This is another higher low, okay? Oh no, but sorry, let me take that again. I'm just trying to make sure we get as many as possible, okay, so we get to understand better. Okay, so let's say this is our low, this is our high, this is a higher low, this is higher high, right? Then this is another higher low, this is another higher high, this is another higher low, that's this point. This is a low, this is a low, this is another low. So this is a high, there's a higher high, there is a higher high, then here is another higher high, here is another high that formed this higher low. So it just continues like that. So these are series of higher highs and higher lows, and these are characteristics of an uptrend market, right? It's very simple. How do we determine an uptrend market? It will be forming series of higher highs and higher lows, because this is actually a high, alright, but this next high is actually higher than this previous one. So this one is higher than this, and this next one is actually higher than this previous one. So we're getting it, just these are higher highs. Now in the case of lows, this is a low. Now this is another low here, but it is actually, this low is actually higher than this one. Are we together? And now this next low is actually higher than this previous one. So is a higher low. This other next higher low is a low, but it's higher than this previous one. So it's a higher low. So it just keeps forming series of higher highs and higher lows. This is how we determine an uptrend market. Alright? Uptrend market. Uptrend. This is an uptrend market. It keeps forming higher highs and higher lows. Now that is about an uptrend market. Now let's look at a downtrend market. Alright? Okay, I think we have one here. Now this is actually a downtrend. Someone will say, how do you say this is a downtrend market? Now we said the major characteristics of a downtrend market is that it's going to be forming lower highs and lower lows, right? So let's start picking them out. This is our first high, right? This is our first low. This so this is a high. This is a lower high, all right? Then this is a low. This is a lower low, okay? Then this is another lower high. This is another lower low here. This is another lower high. This is another lower low. This is another lower high, and it keeps going. Series of lower highs and lower lows. Are we together? It's very simple. Now these are the characteristics of a downtrend market. Remember, this was our first high, but this next high is actually lower than this first high. That's what makes it a lower high. All right. Then the next high we're having, this next one, it's actually a high, but it is lower than this high. So it's actually a lower high. Are we together? Now let's look at the lows. This was our first low, right? And this is another low, but this low is actually lower than this previous low. So this becomes a lower low. Are we together? Now this is another low, but it's also lower than this previous one. So this one becomes a lower low. This another low, it's lower than this one, so it's a lower low. So the market keeps forming lower highs and lower lows. In this case, that is a downtrend market. Are we together? Yes, a downtrend. So we say this market is on a downtrend. So it's as simple as that. This is simple illustration of downtrend and uptrend market. Okay, so the next thing we are having on the list is support. Now, what is support? Excuse me. Support refers to a price level at which a currency pair has historically had difficulty falling below. It could be a currency pair, it could be what, synthetic indices, it could be commodities, it could be stock, any chart you're trading on. All right. If you're able to spot a level that historically the market has had difficulty falling below, that level is taken to be a support level. All right, that's a support. Then the next thing we are having is the resistance. Remember, we are going to take both of them. We'll go to the chart and explain all of them. All right. So looking at the resistance, we said the resistance is a price level at which a pair or a market has historically struggled to rise above. Right? We said traders often view this level as a point where selling interest is strong and the price may face challenges breaking through. So a resistance level is a level whereby price has struggled to rise above. That means whenever the market rises to that level, it actually bounces back downwards. So price is struggling to rise above that level. It's actually called a resistance level. Now, in the case of a support and resistance, now let's quickly go to our charts. Let's quickly go to our charts and explain this. Sorry about that. Okay, so we'll go to our charts and we'll say, let's just get a spot and explain support and resistance. Okay. Now, even as we're looking for where to explain that with, just see a support as the floor of your apartment. All right, just visualize the support level as a floor of your apartment and the resistance as the ceiling of your apartment. So if you take a ping ball, all right, like a table tennis ball, and if you bounce it, let's say you bounce it on the floor, it's going to bounce. If you throw it on the floor, it's going to bounce depending on the momentum at which you're throwing it. All right, if you bounce it, it's going to bounce and it will hit your ceiling. From the ceiling, it's going to bounce downwards. If you hit the floor again, from the floor it will bounce upwards again, just like that. So see the floor of your apartment as a support level, and see the ceiling of the top part of it as your resistance level. These are a simple illustration for okay, let's make it of this, for support and resistance. Are we together? Now in this case, let's pay attention to this region now. Okay, we're going to use this to explain our support and resistance levels. So let's pick our tool. Okay, let's say for the support, let's say this is a support region. Okay, let me take off all that. So let's say this is a support region. Okay, so whenever the market comes down, it comes down to that region, it bounces back. It comes down, it bounces. It comes down, it bounces back. It comes down, it bounces. Are we saying that? It keeps bouncing. It just keeps bouncing back. Just keeps bouncing back. That is, so this area is a support level. Are we together? It's very simple. Remember, it's the base. Excuse me. It's taken to be the base, so it just keeps bouncing it back. Are we together? So this is, let me wipe off all that. So this region is taken to be our support level in this case. Okay. Yes, this is our support level. Are we together? It's very simple. This region now, this region where the market keeps getting rejected, bouncing back upwards, that's our support level. Now in the case of the resistance level, is, let's take the stop as our resistance zone. So we notice that market gets up there, it bounces it back downwards. It gets back up, it bounces downwards. It gets back up, it bounces downwards. It gets back up, it bounces. It just keeps rejecting. It just keeps rejecting. All right. Now this zone is actually tagged to be a resistance zone. Let me clear off all that. So this zone This zone is actually a resistance zone, whereby whenever the market gets up there, it bounces it back downwards. It keeps taking it downwards. So in this case, this up is a resistance. All right. So that's our resistance zone. This is how simple it is. All right. So the base is the support. The top is a resistance level. So that's just about support and resistance. They are everywhere. Wherever you get to, you definitely find support and resistance. Are we together? So it's just there. Now the next thing we're going to be looking at is the lot size. We say in forex trading, a lot refers to a standardized quantity of a financial instrument. Right? We're going to explain. We'll go back to the charts and we'll know what a lot size is practically. All right. But let's take definition. The lot sizes are used to measure the volume or size of a trade. The standard lot size is 100,000 units of the base currency, but there are also smaller lot sizes. All right. So let's look at the forms of the types of lot sizes we have. We have the standard lot, which is equal to 1. 1 is a standard lot. All right. Then we have the mini lot, which is 0.1 and its multiples. All right, 0.1, 0.2, 0.3, 0.4. All those are mini lots. In the case of the standard lot, it could be 1, 2, 3, 4, 5, 6. Those are standard lots, multiples of standard lots. All right. Then we also have the micro lot, which is 0.01. All right, and its multiples. It could be 0.01, 0.02, 0.03, 0.04. All those are micro lots. All right. Then we have nano lots also. Nano lot is represented as 0.001. All right. 0.001, and also it also have its multiples, 0.001, 0.002, and on, as the case may be. All right. And for newbies, now one standard lot, I will advise for newbies, don't focus on those. Write up in the parentheses, in the brackets. All right. It might confuse you a bit, but don't worry about the explanation over there. Like for a standard lot, we said that it's equal to 100,000 units of the base currency. You don't need to bother yourself about that. Just focus on the number. All right. A standard lot is 1. Just know that, and you are good to go. Later on, you can dive deeper to understand what the 100,000 units it's all about, what the 10,000 unit means, what the 1,000 units and the 100 units, as the case may be. All right. Later on, we can discover, you can find out more research. All right. Forex just have to keep learning and learning and learning. Now let's look at the charts to just illustrate what the lot size simply means. Okay, so now looking at this, let's say now the lot size, basically it could be that the lots you choose is mostly dependent on your account size, one, and your risk management strategy you're making use of. All right. So if you are a very conservative person, you have to keep your lot low, right? But if you're an aggressive type of the trading space, if you're very aggressive, that's when you want to go big all time in and all that. All right. But I would advise, have a good risk management, money management strategy. As time goes on, we're going to discuss all that. All right. So that is about the lot. Just for the sake of the quickness of this video, we're just going to stop there for now concerning the lot. But further on, we're going to explain more probably next and all that in our next classes. Okay. So the next thing we have, and I think that's going to be all for the terminologies for now. And in our next classes, we're actually going to, as we take more practical courses, as we encounter new terms, we're going to explain them more to us. All right. Now, in summary, we're saying our discussion on forex trading and its associated terms has provided insight into the dynamic world of foreign exchange. From currency pairs, we looked at currency pairs, we looked at risk and leverage, risk management. we've touched upon crucial elements essential for navigating the complexities of forex markets. It's evident that a comprehensive understanding of these terms is vital for anyone venturing into forex trading, exploring them to make informed decisions, empowering them rather to make informed decisions and navigate the challenges of this financial landscape. So all we're saying is a comprehensive understanding of these terms is vital for anyone venturing into forex trading, right? It simply states like you need to understand these terms because these are terms you'll be making use of so long as you're in the forex space, all right? Like the buy stop, like the pending orders. We need to be able to differentiate each and every one of them. So at every given time, we'll know the exact one to make use of. All right. Now, in the case of take profit, stop loss, we need to know them so we can work with them because those tools, the take profit, stop loss, they're going to help us with our risk management and our risk to reward ratio. They're going to help us with that. So we need to understand each and every one of these terms. It's very simple. Just getting on and we'll flow on with it. So today's class we're going to end here. If you're having any question, just drop it in the comment section, or those in our community. You drop your questions in our Q&A session, and all of them are going to be attended to. Thank you so much for your time for joining us today. If you're new to the channel, once again, please subscribe, turn on your notification. Also like the video if you found it educational. Just like the video. Thank you so much for your time. Peace and out.